Hello and welcome. I'm joined today by Dolfin's Chief Investment Officer, Vassilis Papaioannou. Vassilis, welcome. Good morning.
Good morning, Andrew.
It's the beginning of June and your team, as usual, has just published its monthly investment update. I wonder if we could start by you just giving us a quick overview of the main views from that document.
Going into the last month of the quarter, we take a more neutral view, consistent with our quarterly views as well. So for rates, we're neutral with a negative bias on European rates after what happened in Italy. On credit, we remain positive on investment grade and high yield segments as carry collection remains the key theme, and we continue to favor credit. And last but not least, equities will remain neutral after taking profit during May, and we still favor the US compared to Europe, where in Europe a selective position and selective buying is needed.
Let me just pick you up on one thing you just said. After what happened in Italy, what happened in Italy was significant geopolitical turmoil, I would say. Yes, in Italy, they resolved 3 months of a deadlock and finally got a government, but a fairly Eurosceptic one. And of course, we also saw in Spain the socialist leader become prime minister after a vote of no confidence. And I just wondered what your take on all of this was and what it does from an investor's perspective.
First of all, May was a positive month for risky asset classes, apart from last week, the last week of the month. Now, with regards to the turmoil, I think we have three main parts, three main ingredients. We have the rise of populism, which is a consistent trend after what happened in Greece, what happened in the US. So it's a consistent trend, which does not cause significant concern to us currently. We had the second ingredient was Italy's commitment to euro, which I think we passed that point. Now there's no main danger on that front. Italy is committed to euro. And the last point, the last ingredient was on June 1st, we had Trump's tariffs taking effect, which has severe economic implications for export-oriented European countries. Now, on a political level, these three ingredients will have some implications. And we think that Germany will give more concessions and align more with French President Macron. Whether that will be translated into a European IMF plan or a European investment budget plan, it remains to be seen. But I think that we have some positive long-term dynamics going into play here.
And more specifically, what about the impact on financial markets?
For the financial markets, we remain cautiously optimistic. We still like Europe as a theme. We still see value in European equities going forward. And for the year end, our view remains intact. Now, for credit and for rates, obviously the picture is different. We're negative on Italian debt, and we're also negative on German debt, as we don't see the current offered yield being attractive.
And so, as you and I sit here in London, in Brexit Britain, what impact, if any, do you think this is going to have on the British economy?
What happened last week, I think people might interpret this as a positive, as a good sign that European Union cannot afford to fight multiple battles on multiple fronts. On the other side, people could interpret this as the rise of Eurosceptics could strengthen the voice of the hardliners. For us, the ultimate decision lies within the hands of the UK administration to provide concrete action plan. And that's why we're waiting at the end of the month to see what will happen at the European summit.
So you touched on equities earlier, and I think a question that occurs to me, specifically when I look at a lot of the investment ideas that you and your team generate, is how do you go about making that selection, particularly when there's the kind of turmoil that we've just been talking about?
On the equity side, we have two main weapons. On the one side, we have quantitative based strategies. On the other side, we have fundamental stock picking. For June, we like value as a concept. And value as a concept or as a factor means that we screen and we select companies quantitatively or discretionary based on specific characteristics. Low price to book, strong earnings growth, strong cash flow. And these are the characteristics that constitute the value factor. And for the month of June, we favor value with specific bias in the US.
Vassilis, thank you. Always fascinating to chat to you.
Thank you, Andrew.
And thank you for joining us. Please do visit our website to download your copy of our June monthly investment update. And in the meantime, we look forward to seeing you in the next video.